Go to FIIG now for you. Simon Michell, good morning. Kind of a perfect storm, was it not? When you look at the demand and therefore what played out in the US as one indicator overnight.
Yeah, look, interesting, obviously. I mean, we saw some bit of upward movement in yields late yesterday, obviously on the back of that strong US data, coupled with our local domestic employment data. But that very much reversed, and we've seen a bit of a risk-off trade overnight on the back of the Chinese weaker than expected releases, and also the uncertainty over there with the Crimean referendum, causing a bit of nervousness. People are seeking a bit of safety, and we're definitely seeing some demand for bonds. Yields are down. US Treasuries are down to about 265. And here in Australia, our 10-year Commonwealth Government bond rate down to about 4.1%.
Do you take any significance away from the fact that the benchmark 10-year note are now at its certainly having its longest winning streak since November?
Well, it's certainly interesting given that we saw that volatility late last year when the expectation of the tapering program reached markets. But what we've actually seen while that tapering program has been taking place is yields actually falling. So, they did start the year at about 3%, now down to 265. So that's a significant 35 basis point drop over that period.
Okay, a brief final thought because we are going to have to move on, but signpost into next week. What are you eyeing?
Yeah, look, not a lot here in the domestic realm. Essentially in Australia we've got the motor vehicle sales, and that's really the last bit of data for the year. Not a lot else here. In the US we'll be looking at US producer prices and CPI coming out next week.
Okay, full docket as it were, and enjoy your weekend before it.
Thank you, Carson.
Right. Simon Michell from